I'm Edward Warfield. I'm the publisher of Citybiz. I'm honored today to interview Joseph Warren, the CEO of Warren Capital Group. Welcome, Joseph.
Good morning, Ed. How are you?
Thank you. Good. Could you provide a snapshot of Warren Capital Group today in terms of investment advisory representatives, the number of families represented, just a quick snapshot of where the company is today?
Well, Edwin, I appreciate you taking the time. There are four of us here at Warren Capital Group, our primary registered investment advisor, and we are an SEC registered investment advisor, so we have over $100 million of assets that we manage. We help about 120 families throughout the world, really. There's most of them in the United States, there's a few in the Middle East and some other parts of the world, but we've got quite a diverse base of clients here, and we started in Washington, D.C. years ago, and now we've branched out to the entire nation.
And so your career started at Morgan Stanley. You worked there, and when did you decide to start Warren Capital Group?
2005 was my takeoff year, if you will. I started in 1998, right out of college. At that time, you needed to have a wirehouse, a bigger name. It was helpful to have some training and integration with a larger firm, which I do admire some of the practices at Morgan Stanley, but by 2005, I was just doing so much independent asset management that I didn't really need the backing. So, 2005 we started. I brought in a CIO in 2007, and then a few more people in 2012 and 18.
And can you give us a quick introduction to some of the other members of their team and their backgrounds?
Certainly. We have Stuart Brown, who serves as our CIO, Chief Investment Officer. Stuart's been with me for quite some time, as I mentioned. He's been in the business his entire career. Helps us with managing the portfolios. We do a lot of internal investments here. We don't use a lot of outside managers, so we pick our own stocks and bonds and other things like that. So he's intimately involved in that process. Parker Allen joined me in 2012 as a graduate from the College of Charleston and helps us with both our investment management process, but also with some of our private equity investments. And then we hired Hector Malini a few years ago, who is an MBA graduate out of the College of Charleston. Does a lot of analysis for us, obviously integrates with our client base. But for us, we have an entire team that manages each family as a collective team, so it's very helpful to our book.
And on your website, you've got a periodic table of assets. Can you describe that table and what's your present sort of mix?
Yeah, it's a great question. I mean, obviously, I remember the periodic table of elements from back in the day in chemistry, right before I decided I wasn't going to go into medicine. I think chemistry in college got me out of medicine. So, look, all assets revert to the mean. We can talk about it, as much as you want. A lot of people these days are talking about, these cryptocurrencies or high-flying tech stocks, et cetera. Eventually, all assets kind of revert back to their historical average. So we point out the 5 asset classes based off of really the risk associated with them, which is cash, bonds, stocks, real estate, and commodities. And we just track back for 40 years what the best asset class was over that time frame to sort of point out to clients that it's important to look over the long term, and it's important to also manage risk. Buying an asset at an all-time high is usually a really challenging or not necessarily the best move. So, it's everything else is also interest rate driven. Interest rates drive the asset prices of all assets out there. So if rates are low, usually stocks and real estates have done well, like they have over the last 2 or 3 years. But when rates go up, they usually have it more challenging. But all of them are available. I mean, anybody can invest in any of those asset classes. We don't put any money in commodities, but we use the other 4 asset classes: cash, stock, bonds, and real estate.
And you've got another division, the Live Oak Endeavors, which is involved in private equity investments. Can you tell me about that division and when you started that, and perhaps highlight some of those investments?
Yeah, thank you. The reality is, in the 2008 recession, the Fed dropped rates again, and banking was really in a tough situation. A lot of banks, went out of business. A lot of companies that had relationships with banks could not access their lines of credit and operate. And so there became an immediate need for some companies that needed financing to grow their business, and their bank was unavailable. And so that was the first trade we did in 2000. And in private equity, it was in 2009. It was a company in D.C. called Sweetgreen. We raised some capital in that offering, which was very early on. I think they were on their 3rd or 4th restaurant at that time. And then we got a little bit of a reputation of being somebody that has some passive capital that is, very involved, but not trying to manage the company. and we started to buy some more private equity. What happened was I was doing it in individual single-purpose vehicles each time, and I realized that we could diversify and reduce the risk. Of course, if you have a private equity investment and it doesn't work out, you lose all of your money. If you had multiple investments in one asset class or one master corporation, if one did poorly, you would lose all your money. And that's very important to us as managing risk, especially in private equity. So 2015, we started Live Oak Endeavors to have a basket of assets that were growing and henceforth diversify our clients. And those two assets include, well, those 6 assets now include Rate Reset, Sweet Green, a company called Stash Storage, a company called Amplified Ag. We also have an interest in Buffalo Agency, and we have one other company we're actually in the divestiture stage now. But the basket's been good. The idea is to have Live Oak grow its fair market value, which it has done very well over the last 5 years. It's doubled in value, and we made some good investments, and we bet on some managers that have done quite well for us. So.
And do you come in at the Series A or before the Series A or the Series B? At what time do you usually come in?
We are usually in Series A, B, C. We're usually, there's revenue is important to us. We don't come in pre-revenue. Usually we're at probably like the first institutional investor. Usually there's some friends and family that come in. Not that we haven't come in and bought, maybe even the first investor. But what we want in the private equity world we live is we want great ideas managed by good people who can produce good margins. And if you kind of stick to that simple formula, really good people, unique business, excellent margins, you're going to decrease your risk and decrease your losses a lot. Finding that combination is very, very hard. I mean, in 12 years, we've done 7 deals, so we're pretty particular. But it's been a great alternative asset for our clients.
And what got you excited about Sweet Green?
Salad's pretty inexpensive relative to other competitors that are in, let's say, more meat-centric businesses. You can sell a salad for a very nice price. The ecosystem behind them. I also knew one of the founders really well personally, and I just believed in him. A lot of our work is believing in the people behind these businesses. That's really the folks that are going to push a company forward. You could have an okay business, but with a really great management team, it could do quite well. So where I've made mistakes in my industry is I found a really great idea, but maybe not the best management team. And I found out that that's not a way to make money. So, I just saw these guys as really trying to change the world in the way they've done it. And they have. Yeah, they recently announced, I think they stand by us to go public this year with Goldman Sachs as the banker. And
are there any other investments that you want to highlight?
We're busy right now. We just did a follow-on with a company called Amplified Ag, or you'll probably see them in the Washington, D.C. market. They're under the brand name of Vertical Roots. They grow leafy greens in sea containers, boxcars, aeroponically and hydroponically. Started here in the Charleston market, which is our second market that we're in as far as Warren Capital is concerned. They are able to do a ton of yield in a very small footprint. So 4 boxcars, which is about the size of maybe half a football field, if you will, equates 12 acres of land production, and they can yield 15 yields a year on those 4 boxcars. So they grow leafy greens, and they can basically, they have a large amount of production relative to the size. It's also more, it's safer. Disease is not spread in those environments, or it's confined in 1 boxcar. So they've been going for 3 or 4 years now, but they've spread all over the Southeast. I think they're probably the furthest along as far as where they're headed. Another company that's in Tysons, not far from where you are, Edwin, is a company called Rate Reset. They allow consumers to reset their interest rates without refinancing. So if rates go down and you have a mortgage, you can click a button and get a new interest rate. Obviously, that's been pretty enticing for everyone over the last few years. As rates went down, they've started to accelerate as well. Those are a couple of names out of the gate. We have several in there, but we've been real pleased with those investments in the last 12 months.
So the RIA business is pretty frothy with lots of roll-ups, lots of acquisitions. What are your growth plans? Are you going to be someone to roll you up, or do you have plans of just staying independent?
I've got a 6 and a 4-year-old who like to look at the ticker tape with me, so I don't see it going anywhere for some time. Look, I've got a great team with Parker and Hector and Stuart behind me. Parker and Hector are both, significantly younger than I am, even though they're sort of tenured in the business now. I'm sure they'd want to operate the company. But we'll add maybe a few more bodies. We grew a lot over the last year and a half, 2 years, even during the pandemic. And but we're able to service a lot of people. We'll add more bodies. I don't see myself. I enjoy the business. I don't know what I would do if I wasn't investing money. There's only so many hours to do golf and something like that, things like that. There's only so much of that I can do. So I enjoy what we do, and I enjoy working with our clients.
So is there any part of the Warren Capital Group story that you haven't shared with us that you'd like to share with us?
Well, it's nice talking to you, Edwin. I was just talking to you briefly before we get started about the benefits of, relationships with companies like yourself, working in the PR marketing world, getting your name and exposure out there. We've done a really good job at running money and making clients a lot of money. We haven't told the story very well. We also recently launched our podcast, which is called On the Rocks with Joe Warren, where we interview a lot of executives that we've worked with, or just professionals or people that I admire that have overcome challenges. And so what I'd like to remind your listeners and viewers is that take advantage of situations that are in front of you. Exercise what you can. If there's an opportunity for you to move forward in life. We encourage you to do it. And also, we give advice to folks for any particular asset. It doesn't have to just be picking a particular investment. So if you are trying to protect your net worth, grow your net worth, work with someone else that's also on your team and kind of understands exactly what you're going through. We've been through it here on our side, and we appreciate what you guys are doing at Citybiz because you're really helping firms like us get our name out there amongst the competitors. So thank you for taking the time on this one.
Thank you for your time. We wish you the best of luck.
Thank you, sir. Take care.